What's going on? What's going on? What's going on, boys and girls, ladies and gentlemen? So we're still on this journey trying to get this intraday strategy, and we've learned something new last night. We learned something new last night, and I want to share it with you real quick. So, as we know, the intraday strategy, what you have to do is you must have let's start here. You must have what we call period separators, and period separators are basically these blue lines here, this one here and this one here. How do you do it? I'm using trading view implementation. It's from Deriv. Deriv is just a broker that offers synthetics, and it also offers currencies, but I'm more into the synthetic market. How do you add the period separators? You just right click and then just go to settings, then just scroll down until you see session breaks. Just check it on. As you can see, uncheck it, they go away. Check it, they go back, and then just press OK. Now let me just make this quick. We've discovered something really new, and we'll do this on the 29th and on the 28th. So what you do is, the strategy says you have to identify the intraday, right? The intraday is where the day starts. For this broker here, it's going to be at 00, the first candle, 000 there. You have to mark its open, and then you have to identify a couple of things. So what I've discovered is, after you identify the intraday candle, you have to identify how the market is moving, then the order flow. And we can see that the order flow is generally from here going downwards here before the intraday. It shows that it's just a downtrend, right? It's a downtrend. Anyway, how are we going to deal with this? The first movement, there's going to be three movements. The downward move, the upward move, and then the downward move again. Three movements. It could be either way, and we really need to learn how to identify these movements and capitalize on them. So what we're going to do is, for the first movement, we've identified that the order flow is bearish, right? Since the order flow is bearish, order flow just means how the market is moving, right? We are seeing bearish what am I going to say? Bearish momentum, right? Bearish momentum. Higher high, higher low. Higher high, lower high, higher low. What the fuck? I forgot the terminology, but the terminology is not really that important. Just know that it's going down. As you can see, it's going down, right? But how are we going to enter this after we mark the intraday? So you just go, I think you can use the 5 minutes and the 3 minutes, right? So what you do is, you woke up, you open your charts. What you do, first thing you do is identify the intraday candle, which is this first one here, and then what you do is identify the order flow. We see that it's bearish. Now we're gonna go to the 3 minutes, and since we are seeing that the market is bearish, it means that we're going to look for sells, right? We're going to look for sells. How are we going to look for sells? Just by the intraday line here, we are going to look for a couple of things. So the market is bearish, right? So we're going to look for, in the 3 minute chart, we're just going to identify, since it's a continuation, we have to look for what do they call it? Break of structure. So there's a break of structure here. Right? And then there's another break of structure somewhere here. Let me just use the trend line. There's another break of structure here, right? So what we're going to do is, the candle, this one here, that initiated these break of structures, we are going to use it as our entry. So what we do is, at the body of the candle, that is where we're going to place our sell limits. So what we do is do that, not long but short. That's where you place your sell limits there. And what do you target? As usual, the target doesn't change. We're going to target a previous order block from the previous day, whatever, right? And should I go to the 1 hour? Should I go where? Just something like this. Let me just put it into perspective. We can see that the market was at some point in time, it was here, broke structure, and it's been on a move upwards, right? So the first move that initiated this, the first candle that initiated this move upwards, is going to be our order block. And well, when you do this in real time, it's going to be kind of difficult, kind of hard, but it's life. Life is not easy, right? And as you can see, that is where the market returned, that is where the market reversed, and that is your initial target. This is the first move that we mentioned. This is your first target, and that would be the first trade of the day. And it's a good risk to reward ratio. It's a good risk to reward ratio. And the second trade of the day is going to be the reverse, right? It's going to be the reverse. And well, if you are a gutsy trader, you can just enter from the poking of the order block, or just at the 50% of the order block, right? You can just enter at the 50% of the order block, a long position. And like we said, you're going to target, let me just do this first. Okay, let me place the trade first, and then we can find our target. It's going to be a long position, 50% of the order block. 50% of the order block. Let me just do this. Yes. As soon as it pokes, you can enter, but we'll try to find a better way of doing this. Now we said the first movement is going to be a continuation, right? The second move is going to be a reverse. We know that the market breathes in and breathes out, right? And for the second move, it's a reverse, right? But what is our target? Our target is going to be some sort of breaker block, and we can see that at this point here, we had strong resistance here, but it was broken by the market here, and we can consider this our breaker block or breaker zone, right? We can see that the market respected this breaker zone, breaker block, whatever, and it ended there and took a reverse, right? It took a reverse, and that is what you're going to do. At the breaker block, we're also going to take a trade there downwards, right? The last trade for the day. And this one is kind of tricky. The last trade of the day is kind of tricky because you don't know where the market is going to end, but you can target things like the last order block, or you can target previous supports, right? I'm just being general stating these things. I'm just being general, but there's a proper way of doing it, step by step, mechanically, not just being haphazard like I was in this video. I'm just trying to make a video real quick and then finish. But you can see that what happens every day is there will be a move downwards or upwards, whatever. There will be a first move, a breather move, and then the last move, right? Every day it happens like that. The first move, the breather move, and then the last move. Well, the breather moves could be two, whatever. It could be a lot of breather moves, but there's always that first move, breather move, whatever, last move. First move, second move, last move. Every day. Well, we can say first move, last move, first move, last move, first move. Well, it depends on how you're going to. Every day is going to be different, right? And once you know what to do, when to do that, you'll be sorted, right? But in general, we should know that there's the first move where we use the well, let me just not say it's written in stone, it's carved in stone. The rules will change. The rules will change depending on what the market gives you, right? But mind you, this is what happened today. Anyway, have a good night. Happy Easters. I hope you're enjoying yourselves. Peace.